Welcome to the Crypto and Blockchain in the Adoption Phase webinar from Belvoir Capital. We are joined today by Stefan Bauke, the CEO of Belvoir Capital, Adrian Marcoux, Head of Investment Solutions and a crypto evangelist, and David Klingenbeck, Portfolio Manager at Belvoir Capital. Now, just some technical instructions for you before we start. We will have a poll today. So please make sure, with our partners at Mentimeter, please make sure that you scan the QR code with your smartphone camera when we're asking the poll questions. So to kick us off, I'd like to welcome Stefan Bauke, the CEO of Belvoir Capital, to give some opening remarks and to walk us through a bit of what we will be discussing today. Welcome to Stefan.
So thank you everyone. Thank you to everyone make it possible to join this webinar. It's our very first webinar, so don't please be too harsh with us. But we've been so curious about this topic over the last month and some of us over the last years already. And I wanted to share that with our audience and with our people also at Belvoir Capital. And I thank Lisanne for helping us putting this all together. Lisanne is not only a very good friend of mine, but she's also one of the top-notch organizers of tech events in Europe. So if you want someone to organize your own webinar or event, then please feel free to talk to Lisanne. I will put you in contact with her. Why we're here now is a very good question. It's about, I would say, 10, 12 months ago, I didn't have a clue about blockchain and the crypto. And I said, why should I? And Adrian was keeping me pushing and saying, please, Stefan, you have to look at it. It's going to change the world. I said, leave me alone. It's all bullshit. It's a lot of hot air. And since then, I had the deepest and very steepest learning curve since my early ages as an analyst at the corporate finance department more than 20 years ago. And since then, we are improving our knowledge and moving on and lifting off with our blockchain and crypto technology. And what should be the take-alongs for you? Get a little bit of a flavor, what it's all about. If you're new to the scene, if you're a little bit advanced already, feel free to join us and come up with questions, and we can help you find out what it's all about. And we, as an asset manager, we discovered this universe also for investment opportunities. And I invite you to join that ride and join that journey with us. So thank you, guys, and I hand it over now to Lisanne.
Thank you, Stefan. And so to kick off today, we have something. Before we jump in, we would like to ask you, our audience, to help us with understanding more about your knowledge about the crypto space. So if you actually scan this QR code, we will share with you the first polling question, which will be, how deep is your knowledge of the crypto space? And as you answer, I can show you the results in real time. So if you take your smartphone, how deep is your current knowledge of crypto? We can see some interactive answers happening here from our audience. So we can see that most people have some familiarity, some have very little knowledge, and very few are very familiar and are crypto experts. Okay, so this is really helpful to help us kind of set the scene for our discussion today. So with that, let's jump right in. I will invite Adrian and David to briefly introduce themselves. Then we can jump into the sessions.
Hi, everybody. I'm Adrian Marcoux. I'm head of investment solutions at Belvoir Capital and part of the Belvoir Capital family. I'm in crypto because it is the next digital mega revolution, I believe, and which has already started. And I invite you to share it with us.
I'm David. I'm a portfolio manager here at Belvoir Capital for the traditional asset space, but also the new digital assets, and they are a focus on DeFi. I got sucked into the whole crypto world on the high of the 2017 bull cycle and have never left since.
Thank you, guys. So crypto has become a sensation in the market over the last 12 months, but let's try and take a step back and really understand the impact of this new adoption phase of crypto and blockchain. So I will let you set the scene for us, David. I mean, how is blockchain changing our world?
Okay, so in every transaction that two individuals face, trust is the key. How can you trust the other part to fulfill their part of the deal, right? How do you know they have the goods? How do you know they have the money? And to solve this trust problem over the centuries, organization and middleman function have evolved to solve this issue in one way or the other. This system is not perfect, right? The middleman creates friction, it's an additional cost. Also, it's a centralized power that does not always act in the best interest of all participants. But the system has worked, and over the centuries, really business, society, and money has evolved. So now suddenly we're moving from the industrial age to our digital age, and the internet comes up. We purchase things online. We communicate by sending emails, but money has not really arrived in our world because sending money online in a real digital way is still a big hustle. If you send an email with a picture, it is not the original, right? You just send a copy, everybody can copy it, it's not a problem. But if I would send you 100 francs, it really has to be made sure that I don't have that money anymore, and then you have it, so that I can't double spend this money. What happened in 2008 was this anonymous guy or group, Satoshi Nakamoto, comes up with a paper. And his proposal was, instead of a bank that records every transaction in one central ledger, all users together record all transactions at the same time in a distributed way. So instead of the middleman, you use a technology, cryptography, and a peer-to-peer network. And with this invention of the blockchain, he made Bitcoin the first digital currency to solve that double spending problem without a trusted authority or central party in the middle. And people were realizing, wow, this technology is actually working. And then over the years, people were thinking, what other systems in our world can we improve by using this blockchain technology?
And so thank you, David. And so maybe over to Adrian. With the adoption of blockchain, what are some of the paradigm shifts happening in existing old world versus new world systems in finance, particularly with respect to payments?
Well, I think it's good to understand that peer-to-peer payment potentially is going to disrupt the banking system, the payment systems, and finance altogether as we know it today. Mm-hmm. So if you switch to the next slide or question.
So I have actually something that I'd like to put to the audience. So as the guys have said, we can transfer any amount of crypto from wallet to wallet without a bank or crypto exchange. So no middlemen. So what I'd like to ask you perhaps to join us in our next polling question is to scan the QR code with your smartphone and help us answer the question. How long do you think it takes to send 100 Bitcoins from one wallet to another? And I can show you the results in real time as well. How long do you think it takes to send 100 Bitcoin from one wallet? Super exciting as people are replying. So most 90% of you think it takes 10 to 30 minutes. So I will let David cover this response, put you to relieve us of our suspense of the answer, David.
Actually, we have a very smart audience. This is the correct answer. Yeah, on average, it takes around 10 to 30 minutes.
10 to 30 minutes. That's pretty quick. So bear with me as I present the next.
Lisanne, may I jump into this? But this is just now. Mm-hmm. And new blockchain technologies will make it even faster. And the transactions will be made within seconds. So there is a big jump in technology as well.
I agree. And this kind of elimination of A to B, between A to B, eliminating the middleman, what does it mean for how exchanges are being transformed going forward? I'll let Adrian answer this.
Well, first of all, I think it's important to understand that we're not the only ones who think it like this, that is going to be extremely disruptive. So The Bank of England chief economist Haldane just 2 weeks ago stated that central bank digital currency, CBDC, could fundamentally disrupt centuries-old banking models, which is about 800 years old, as we know it today. So if everybody, again, uses payments directly on the blockchain without the middleman, commercial banks are left out and won't create money supply anymore. This is really fundamental and will fundamentally and potentially change the finance world as we know it. So the money creation in the old world is, as you can see on the left side, somebody brings $100,000 or even $100 to the bank, and the bank gives it out to the next debitor, basically, and this is how money is being created. We all know this. But finally, if you go to a bankless crypto payment system where you have real-time payments, all of a sudden, you don't need the banks anymore. So you have already real-time payments, you could say, with things like Twint or Visa or alike or Revolut. But this is like only instant booking. Crypto, in contrast, is instant settlement. So you send it, and you do not send only a booking and get somewhere at a bank a credit. You actually transfer the digital asset from A to B. So this is only the beginning, I would say. It has a massive impact. The question is, what is decentralized finance? Because you can send an asset on a blockchain directly from wallet A of, let's say, Mr. Müller to wallet B of Mr. Bauke, without a middleman and in real time, it opens a whole new way also for trading and exchanging assets against each other. So
you say that's the functioning of Bitcoin as well.
That is the functioning of Bitcoin. And when you organize a market all of a sudden where people can exchange assets, this is also a very new thing. So the question is here, what is so decentral versus what is so decentral about the new organization, and what are the differences to a centralized exchange model? So unlike today's stock exchange, where you trade and we need to wait until it's settled, 1, 2, 3 days, however, whatever, you can simply connect with your wallet to the exchange, you trade it, you settle it immediately, and you disconnect and walk away with your new assets, physically and literally. So I think this is really revolutionary about the new system.
I can do that using a pancake swap, for example?
You could do it. So Pancake and Uniswap, they have funny names, are already live. This is not a theory. This is already ongoing. And the daily volume in the markets per exchange there is already about $1.3 billion per day. So this is not a theory. It is happening. And at the moment and today, most people do loans and borrowing, but this is just the beginning.
Since it's not a theory anymore, perhaps you can help us, David, to understand what are some of the long-term possibilities for every individual to participate in this decentralized finance ecosystem?
So as that ecosystem is so open and really everyone can participate in, it creates for individuals, but also for us as an institution, opportunity to put our capital into the system and let it work. And by that, it means we can participate in the securities lending, in the lending and borrowing that Adrian mentioned, or we can provide really as a market maker liquidity to the exchanges, and we get rewarded. We finally can put our money back to work, and especially in an environment like today with zero interest rate policy, this is super exciting.
It is exciting, and it has grown exponentially over the last 12 months, particularly with respect to new users and asset flows, as we can see by this teaser chart here. And so I will put it over to our audience again. Perhaps you want to help us to answer this next question. Please, for this question, scan the QR code with your smartphone and help us answer the question. How many US dollars do you think have become locked up in smart contracts over the last 12 months between July 2020 and July 2021? And I will show you those results in real time. Let's see what we have here. We have an active audience today, guys. Super engaged. Right, still voting. Wow, how many? So the majority, 52% say 48% from 2 billion to 85 billion over the last 12 months have become locked up in smart contracts. I will let Adrian answer that for you. What's the actual answer, Adrian?
Well, the actual answer is about 113 billion, so 110-ish. It depends on the market valuation. And you can see the growth has been extreme. And I think it's a lot of money to be locked up in a decentralized system already and providing liquidity to the market.
So decentralized finance has definitely taken off, but perhaps we can talk about another application in the crypto space that has also taken off that our audience should know more about. I'll let you start that, David.
So this year, the popularity of NFTs or non-fungible token has increased dramatically. It hit peak media attention in March when that digital artist, The People, sold an NFT at a Christie's auction. And yeah, since then, the pricing and the volume have been on a roller coaster, also crashing together with the crypto market. And it begs a little bit the question where the NFT market is going. And NFTs, they hold the promise of disrupting not only digital art scene, but also property rights, supply chains. And it really appears that NFTs are today in a really early stage of changing and challenging intellectual and other property laws. So for me, this is the fastest moving space in crypto. And I think it's going to be bigger than almost anybody thinks or understands, that it will probably knock over almost every business model that we see today.
David, may I jump into that as an audience? What is an NFT? What is it exactly?
I'll let Adrian answer that.
I'm happy to answer as well. I mean, an NFT, non-fungible token, is basically very simple. It's a digital certificate of authenticity and ownership. So in contrast to other crypto, they are unique and indivisible. It's one thing. So the first use cases that have been applied is in the art sector, where you have a property right attached to a art. And for the future of art and maybe luxury goods, this is really fundamental, because you will have in the future provenance and see who owned when, what, and what was done with this particular thing. So it will change and be attached in the Internet of Things as well. Another use case is like sports and concert tickets, for example, because it's much more complicated to falsify or forge them, and you can save even information. So you can use the token itself as a ticket to enter a stadium or something. Another really important thing I can think of how to use NFTs in the future is actually voting rights. Mm-hmm. So either for business or even politics. Think about it. You have an NFT per person. You can anonymize it, and you could vote with it on general meetings of companies or even in politics for elections, and make sure that the person executes the voting right who's authorized to execute it.
And what about property rights? Could that also be something?
Sure. Same with property rights. So if you attach an NFT later in the real world to watches, to a car or something, basically it will increase the transparency of all goods in our environment.
Thank you. So with that, I want to ask the audience a bit of trivia. So David kind of teased us a little bit with the Christie's auction for the artwork from people last year. So what I'll ask you to do for our next polling question is to scan the QR code with your smartphone, as we did before. And can you guess, how much do you think the most valuable art piece sold for, NFT sold for, I give you a little hint there, in 2020, last year? And I can show you those results as we're voting. How much do you think the most valuable NFTs sold for in 2020? 63% say 70 million. Wow, 29% say 50 million. Well, we have a very educated audience today, guys. Yeah. 70 million is right. That art piece from Christie's, from Beeple, sold last year for 70 million, if you can believe that. Thank you guys for participating. I'm loving the interaction today of our audience. As we move on, we're talking about Bitcoin and NFTs, and, some concern has been raised about the energy needed to mine Bitcoin and other currencies. How can we reconcile this? And I'll let Adrian set this up.
Well, Lisanne, that is indeed a very good question. We've heard many concerns and voices addressing the energy problem. And the truth is, immense amount of energy is being consumed for blockchain, especially Bitcoin mining. So to give you an idea, the Bitcoin mining globally or blockchain mining globally consumes as much energy as a country like Austria or Norway. So the question is, does Bitcoin mining and blockchain really destroy our environment? It is important to understand, though, that 2/3 of the energy consumption from crypto mining comes from renewable energy already. Still, I would say this is not good enough, because still 1/3, the number itself is so huge. If it comes from fossil sources, is still too high. So for answering the question, why Bitcoin is consuming so much energy, it is good to know about the proof of work and proof of stake concept. So as David has referred to Satoshi in 2008, when Bitcoin was basically invented, more or less, the highest or most important thing was high security standard to make the network really work and have a distributed ledger system, so to say, and make sure that all transactions on the blockchain are really valid. For that, they applied the proof of work. It is based on a very complex mathematical concept with cryptography solutions and formulas to be solved, and you need a lot of computation power for that. And that's actually why cryptocurrencies are called cryptocurrencies. So the blockchain community is fully aware of this energy issue and already has come up with a solution, which is called proof of stake. There are others as well, and as we speak, new inventions are probably being worked on. But the proof of stake concept, which is also already live, is thousands of times more energy efficient. So the basic of the concept is that a person who creates the next block on the transaction gets rewarded by how much he has staked in coins, in the native coins of the respective blockchain. And it does the same job, and I think it's almost or basically as safe as the original concept.
Thank you, Adrian. And David, perhaps I can ask you now, given these new proof of stake concepts, what are the long-term implications of crypto within the global financial ecosystem from an energy perspective?
I think when we talk about the energy perspective and the environment, it is really important to add the perspective. So to what do we compare it? And we should compare it to its two narratives. First, digital gold, and second, a financial or a banking system. So there are studies that calculate all the input costs and demonstrate that the overall greenhouse emissions that are produced by Bitcoin are actually half of that from gold. And when compared to the overall banking system, that Bitcoin produces less than 95% of those emissions. Wow. So this perspective is very important. And while the numbers for gold are quite forward, I have to admit that we surely can debate and argue a little bit how you define banking system. But nevertheless, that relationship is important to have in mind when we talk about the energy consumption topic. And also, it is important to mention that energy is not energy. It's not a good that can be globally distributed. It is a very regional phenomenon, so it matters where it's produced and how. And Adrian already mentioned that Bitcoin mining gets almost 3/4 of its energy from renewable. And I think that Bitcoin mining and crypto mining in the crypto world could even help boost the adoption of renewables, because if you combine Bitcoin mining with energy generation and storage, then you create a very powerful system where basically the renewable energy producer, the solar producer, they can use the energy from peak times and sell it, and therefore create really higher profitability in the whole system. So I think we really have to embrace the whole discussion, although it came from people like Elon Musk with doubtable goals, but I think it is really important to address it.
Well, it's definitely very interesting to hear the evolution from proof of work to now proof of stake being more efficient. And with this, I will put something to our audience again. Please scan the QR code with your smartphone to help us answer the following question. In terms of Ethereum mining, how much more efficient do you think, energy efficient do you think proof of stake is compared to proof of work? So how much more energy efficient is proof of stake compared to...
Wait. Let the people scan it, Lisa. I'm sorry. I was not fast enough. Too late.
No, they're voting. Look, they already scanned it. It's awesome. We have some voting here. We have... Ooh, it's close, guys. It's pretty close. Who's going to get it? So we have the majority think so far it's 1,000 times more efficient. So proof of stake, you think, is 1,000 times more efficient than proof of work. So I will let Adrian give you the actual answers.
Yeah, I like it that the opinions are pretty spread, because the real answer is that the proof of work consumes 2,000 times more energy than the proof of stake. And probably if this is a bit of an eye-opener, because this is just helping us for the next 5 to 10 years, probably in the blockchain world, to take out the heat a little bit of the energy problem. We still have lots of work to do, but the step from one to the other is already huge. So it's important to understand when you use other cryptocurrencies that it's not that bad as most people and the press may suggest.
Yeah, that's true. Thank you. That was illuminating. Definitely for me.
And the offset is very important also, the more blockchain is in use, the more coins are in use, the more mining is in use, the less energy will be consumed on the financial system, on any kind of sectors in the economies globally. So that's also very important, because when you think back in time in 2018, the energy consumption of Bitcoin was already a big theme, and said, okay, if all Bitcoins are mined, and we're very close to it, there's like 20% left or 15% left of all mined Bitcoins, they will consume the whole energy production of the world. So, and now we are there. What's happened? Nothing happened. So the predictions were completely wrong.
That's true. Now, given all this talk about energy, obviously some of the energy regulators have become interested in the space. However, the financial regulators have also become more and more interested. What kind of long-term impact could this have from a regulation perspective on the crypto space? Adrian.
Well, that's a good one, and it's actually pretty important and sometimes also funny. Like 5 years ago, regulators, governments, and even very renowned investment bankers didn't take crypto serious at all. Today, where like billions of dollars worth of assets trade every day on the market, all of a sudden regulators are stepping in already. So, for example, on the left-hand side, Binance is the biggest exchange by volume, was put a bit on the spot by several regulators because they are probably the biggest by volume in the market. But I would expect Binance to come to an agreement with regulators anytime soon and carry on with their normal business. But I have to say, not all bad news. It's not all bad news, basically, when regulators come in. Coinbase, who most of you probably have seen, who went IPO in April of this year with a roughly $80 billion market cap, is very compliant. It's a US company. And they got approval from the BaFin in Germany for proprietary trading, and custody business in Germany. So no matter what you think about regulation, if it's good or bad, I think it's important to understand the more regulated the market will be, more institutions can join and will join, and probably raise a little bit the value of the entire topic and assets. One funny and interesting thing is that I found this very interesting extract from the newspaper of the San Francisco Examiner in 1996, where telephone companies were trying to ban internet software company from getting into the market. So the moral of the story is you cannot ban technological progress and innovation, and this counts for crypto as much as for other useful technology. So regulators will come in, they will try to regulate, maybe also tax, but they can't ban it anymore.
But thank you, Adrian. There also are positive stories. So perhaps we can ask you, David. how has regulation evolved to support the growth and usage of tokens so far?
Over the 12 months, we have seen real interest and activity in the whole digital asset space from all participants. And even though regulation and government influence contradicts the original idea behind Bitcoin and cryptocurrency, in my opinion, mass adoption can only occur if we have a regulatory framework and if that is established, right? So there are regulators who are friendly, some are unfriendly, but most of the regulators just want to make sure certain illegal things do not happen and that the government can get taxes. And I think everybody can agree on that. And it's not too a big thing. We just have to move through that phase. And the biggest positive news in terms of positive regulation and mass adoption surely came from El Salvador's president Bukele. Then we see him here on the slide. And on June 9, El Salvador became the first country in the world to officially adopt Bitcoin as an official currency. So every business has to accept Bitcoin as a form of payments for goods and services. And El Salvador even went so far to give every citizen $30 in Bitcoin to jumpstart the whole development, right? And this development is amazing for society and humanity because in El Salvador's case, the economy relies heavily on remittances, so money sent home from abroad, and that's 20% of the country's GDP. And if those people don't have to pay 20% fees for Western Union, or the whole process is more efficient and everybody benefits, then it is a huge positive action for those lives and mass adoption of crypto.
So, I mean, that's illuminating. But since we are speaking about mass adoption, we have to also talk about the price volatility given the recent trading volumes over the last few months. I'll let you set that up, Adrian. Easy question for you.
Very easy, yeah. Well, we're talking so positively about Bitcoin and blockchain and everything. And wow, look at this. In the last 2.5 months, Bitcoin went down 50%. Are you serious? Other coins on the right-hand side, you can see Holochain as an example. They're like 5,000 or even more others, 80, 90% down. So what does it mean? Is crypto dying again? Or, I mean, what's happening? I think we need to put this into perspective. So if you look at the last 4 historical Bitcoin corrections in 2011, 2013, 14, and 18, we always saw corrections of these magnitude. 93% in 2011, okay, that was very early, 70%, 81%, 84%, and eventually it came back all the time. Mm-hmm. And also think about the dot-com bubble burst to 1999, 2000 for the people who can remember amongst you. I certainly can. It went down 76%. And guess what? Afterwards, Amazon, which was part of this internet revolution, became the most and biggest company by market cap on the planet. So I think that's a good perspective. Still.
Okay, so are we still in a bull market then? How about you, David? Are we still in a bull market?
So, as I mentioned, all of the transactions are saved and stored in that blockchain. And it is completely open, so people can aggregate the data and analyze the data. And that's called on-chain analysis. And are we still in the bull market? So the fundamentals clearly say, yes, absolutely. Here on this chart, we see the user growth. And the user growth is still rising. It's still grinding higher. And despite to those really bust cycles in the past where the red star is displayed, user growth dropped. But now user growth is still grinding higher, and it's really a very positive sign for the whole space.
So we are bullish, clearly. So now I will ask our audience to help us a little bit. So we've mentioned that the price of Bitcoin is down 50% from its peak in 2020. But do you know how much Bitcoin has appreciated over the last 5 years? How much do you think Bitcoin has appreciated over the last 5 years? And to help us answer that question, please scan the QR code with your smartphone, and I can show you the results in real time.
So before we answer that question, I would like to jump into that what David was mentioning. This is like the community of users in the blockchain, the last chart, which is very, very important. That means every day, new joiners, new users. And when you accumulate this number on a daily basis, like 15, 20, 30, 50,000 new users every day, it's just amazing. And we're getting into the hundreds of millions and not anytime soon into the billions of users.
Completely understood. And it looks like our audience is fully engaged with this. So far, we have 53% of you think it has appreciated 10,000% over the last 5 years. 20% think 32, 1355, 13,2000. So to help us with our anxiety and about this, we can ask David to put us out of our misery so that we know exactly how much the price has appreciated over the last 5 years. And we see
over 30,000%.
32,000% over the last, well, this is 8 years, but this is incredible, guys.
Maybe today is only 31,000. Who knows? Slightly higher than a German government bond.
So the question from the audience would be, if I'm the audience right now, will this come again? So we're going to whatever 1 million per Bitcoin? What would be your question to that?
Your answer to the 1 million question.
That's literally the $1 million question. So I think the trend will stay this way, to be honest. There's still long term to go. There's another halving coming up in Bitcoin over the next years. I think potential is high. And it's important to understand there are only 21 million Bitcoins maximum possibly be mined.
This is a lot of volatility, guys. So I have to ask, how has Belvoir handled this volatility over the last few months or 12 months?
Well, as some of you may know, that we have a investable crypto strategy out there. Crypto alpha strategy, as we call it, has significantly reduced risk compared to the overall market. This is because we tackle the market completely differently. We have an active risk management. We have a non-correlated trading approach used and applied by artificial intelligence algorithms. So,
and why did you start the strategy? Why did you start the strategy?
Well, if I may add that Bitcoin is down like 50%, as we just learned, and we are still clearly up with our strategy. The reason why we have launched our Crypto Alpha strategy is because our technology partner and together with us have seen in trading that the machine learning algorithms deliver great returns in crypto markets and actually much better than in traditional asset classes like foreign exchange or index futures or so. We believe this is because the market is still in early stage and therefore much less efficient. Liquidity is lower, so it's easier for the algorithms to recognize movements. Market is still fragmented, and to be honest, I think many participants are relatively naive in the market and pay little attention to trade execution, which makes our life easier. But last but not least, the regulatory hurdle to enter makes it impossible or very hard for smart money and large institutions to come in. They have not joined the party yet, and this makes it easier to exploit so-called alpha out of the trading strategy.
And just how do you extract this alpha?
Well, we apply machine learning to the crypto markets and use it, as I said, for active trading. We have a state-of-the-art and fully automated trading algorithm, which operates from signal generation to fully automated trade execution without human intervention. We use reinforcement learning, which is a part of machine learning. You can think of it like when you buy like a robot vacuum cleaner at home. It's the same robotics logic. It's reinforcement learning. You put it in your room, in your living room. It starts walking around and learning where is the furniture. It runs against walls. And the task of the vacuum cleaner is to clean as much surface in the shortest period of time. In a similar way, we apply it to the markets. We let it completely independently train and learn the patterns of the crypto market in this case.
And Stefan, do you want to talk a little bit about how the strategy works?
Not so much about the strategy, how it works. I think it's very important to know that the whole crypto and the blockchain space is very comparable to the old world, the old fiat world. when you remember when I started investing many, many years ago, we had all the way, what we had to learn is like from cash up to startup investments, a different risk and a different time horizon. And when people are asking me these days, so how should I invest and what should I do? And you can divide the whole crypto world and the whole blockchain world into the same kind of fragments, and you can really adopt your own risk profile into the crypto world. So you can decide whether you want to have kind of fixed income oriented investments with very low risk, kind of almost zero risk, or you want to go into the kind of early stage token investments like the seed investors do it when some guys come up from the university with a business plan and they don't know how to do it. So then you give them the first whatever 100,000 US dollars or euros. So the same thing is in the blockchain in the crypto world, and I think that's very important to know. So you can start from cash to short-term deposits, treasury bills, bonds, high yields, up to private equity, venture capital, and that's actually the thing which you have to adopt to the blockchain and crypto world. But the biggest difference in between the old world and the new world, the old world just delivers much less return in terms of risk than the new world. Let's give us an example, the lending and staking. Adrian, or David, what is the fixed income world providing to a safe investor?
I mean, similar, as you mentioned, there's corporate bonds and high yields. So similar to those kind of risk categories, you can easily expect 6, 10, 12% in the lowest risk category. And if you move just a little tiny bit up the risk spectrum, you get 15, 20%.
And how about the issuer risk, the counterparty risk? How do you address that in the crypto world? Because when I buy US T-bills or German bonds or Swiss obligations, how is it then in the crypto world?
I mean, there are risks in that strategy, in everything when you deploy capital. But one thing to reduce risk is diversification, good research, understanding the products, understanding the protocols, understanding the environment. And then you can exclude like the biggest part of the risk. And then you just have a good diversification and have a good product.
So that's the risk spectrum where you can invest alongside all that risk, time and time horizon. And we're positioning ourselves on the lending, staking, or say fixed income side, and already launched our crypto alpha strategy, which is exactly suitable for our investor base. So not so much of a drawdown, very compared to a stock market drawdown when it's not a big crash, but with expected returns much above that what we can expect from equities. And we experienced that over the past 18 months.
Thank you, guys. So your strategy is up and Bitcoin has fallen 50% over the same time period. So this is one of our last questions to the audience. I'll ask you to scan the QR code here. So perhaps you can help us understand what is most important for you when considering an investment in a crypto strategy. What is most important for you when considering an investment in a crypto strategy? And I can show you the results real time. So we have a very active audience. Super, super cool. Relative performance, downside. What's winning? What's winning? Come on, guys, keep voting. Keep voting. Let's go. 46% say relative performance. This is very encouraging, right? Super encouraging, given where you guys are, Stefan, in terms of your performance compared to Bitcoin. Okay, so we're coming down to the wire here. We have maybe a couple of final thoughts for you in terms of outlook. Are we going to have another crash?
So I think the whole space is growing twice as fast as the internet did, and it's just a matter of time. And I think it will be bigger and really bigger than anybody thinks of it.
Yeah, I mean, the genie's out of the bottle. That's clear. Crypto's here to stay, and you can participate through Belvoir and share the megatrend with us.
So now that we are almost at the end of the session, the pièce de résistance of the questions for our audience, pièce de résistance, I should say. If you scan one last time the QR code with your smartphone, you can help us understand. How comfortable would you be incorporating crypto into your portfolio today? And we can see the results real time. How comfortable would you be incorporating crypto into your portfolio today? Extremely. Wow. You're doing great. We're doing a great job, guys. Extremely, somewhat, not at all, unsure. Wow, like we have like a tie for extremely comfortable and somewhat comfortable. So with that, I will let Stefan take our closing remarks to tell you how you can join us on our journey with Belvoir to become more comfortable with incorporating crypto assets into your portfolio.
So thank you very much for joining this first webinar, and it's just a kickoff of a webinar. We will host a lot of series of webinars on details within the blockchain in the crypto space, and we hopefully can manage this on a monthly basis with our specialists, and we will invite also external specialists to give us insights into that environment, because not only the performance, which is important to deliver for our clients and our investors, it's all about the biggest disruption in my entire life I've seen with the blockchain, and the huge potential with the blockchain and the crypto environment to make the world even a better place. This is something which keeps me driving and standing up for this thing every morning. Why is that? Because it was going to be a safer place, a more transparent place, and you cannot be cheated. And I think that's the key thing of the blockchain. And it takes time. In the old world, and all centralized institutions, governments, and everybody is chased now by the community of the blockchain and the cryptos, and are following. So like they've been chased by the virus, they've been chased by the blockchain and the cryptos as well. And they have to answer to that. And I just can motivate you to join that journey and be an early adopter instead of a late follower. So, and then the more you know about it, the more you learn about it, you will become an evangelist, or you will adopt it, like the internet. I don't know when you had your first internet browser in your computer and how you use it today. So I think it's very comparable to that. And there's so much to learn about it. So integrate all kind of crypto strategies, and we've shown you the whole range of risks. So you define the risk you want, and you choose and you pick. It might be with us, or it might be with someone else. We can help you with that, because we're also following other guys doing stuff we cannot do and we cannot provide, investing in those strategies. So you decide what you want to do. We're going to launch the first fixed income product within the next 6 weeks, hopefully after summer season. And you can participate on that if you want to. And we will also launch our next strategy. We call it the AI Alpha Strategy 2, with a much higher risk and return target as the existing one. So that's what it is. And I would like to really, really motivate you to ask us questions and give us feedback also on the webinar to improve our work and improve our content for the next ones. Hopefully you liked it.
Thank you, Stefan. We actually have a 15-minute or 10-minute Q&A time for Q&A. So if you have any questions for the panelists, I will stop sharing my screen now so we can see everybody's face better. Please put the question into the Q&A chat on the right-hand side of your screen. And we can ask now maybe a couple of questions. So I will ask the first question, guys. It's from Amanda McDonald. Right now, NFT carries a financial purpose. How can an NFT be adapted to accommodate for a record distribution purpose, such as a transcript, for example? So talking about rights, right? So property rights, I guess. So Adrian, do you want to address that question?
Sure. I'm not sure I have exactly the right answer to this question, but when you talk about using and applying NFTs in a non-financial sense. For example, if a car would have NFTs distributed and you would track the car where it goes and it would drop everywhere it is an NFT, you could basically allocate the usage of a car in the infrastructure of streets very, very efficiently and make the whole traffic system in that sense more efficient, in the sense that you know exactly where it was and what the usage was. This is one example I can think of. Besides what I mentioned in the webinar regarding the elections, which I think will be a game changer when voters will be able to really vote with an NFT, and you can do digital voting. So I think this could be two examples.
Thank you. We have a couple more questions. This one is, I think, more relevant to what we just discussed. What is your favorite crypto for investment and your favorite company based on what they're doing in the market? I love this. Who's going to take that? That's an easy one, guys.
That's a stock picking question, right?
What is your favorite crypto for investment and your favorite company based on what they're doing in the market?
Exactly. That's a stock picking question.
David, any thoughts?
So I think the easiest one would be Ethereum. At the moment, the network is growing twice as fast as Bitcoin. And actually, how you can evaluate those cryptocurrencies, it is all about the value of the network. So the more people are in the network, and it applies to every network, a telecom network, the higher the network is, the more people are in the network, the higher the value is. And there are so many parallels if you time shift the Bitcoin network and compare it with Ethereum, that the parallels are so clear that Ethereum will rise and grow much faster. And here we are in the large cap crypto, right? If you go lower and look for some small caps or medium caps investments, the world is your oysters. I mean, those are higher risk, but also really higher returns. So
would you say crypto is a good long-term investment then? This is a question from Patricia.
Definitely, yes. That's the buy and hold question, definitely. So if you don't know what to buy, so you buy a basket of different cryptos, and the large ones, as we know right now, Bitcoin, Ethereum, and the other ones. But if you're going to go really on the stock picking and you want to ask us what is the hottest thing we think, Adrian has an answer to that, and because he was very hot on this and he put me on this as well.
I have a personal
theta.
Baby, we have to be a bit careful with financial advice to a public audience.
Exactly.
So, I would use a disclaimer at this point, but I have a baby which is called Theta, and what they are going to try to do is to use crypto technology and blockchain technology and cryptocurrencies to distribute movies and gaming data stream on the internet, which is more than 75% of all data in the world is gaming and videos. And what they're trying to do is anybody can provide bandwidth to stream, and you decentralize totally the server farms that Netflix has, Apple TV has, and so on, and make it much more efficient and get much better streams. And anybody can join this and will receive in real time the reward for streaming. And I kind of like this idea because I think the network, as David said, is going to be huge, huge, huge.
And by the way, the energy consumption will be reduced by that many times.
We have a couple more questions are coming in quick and fast, guys. This is encouraging. So this is a question from Fergus. First of all, if such a high proportion of crypto investors are using it as a store of wealth or in a buy and hold strategy, is it fair to see it as a currency?
I think it's as fair to see it as a currency as you see gold as a currency. So I have to say I come from the foreign exchange trading in the past with many banks, and gold was sometimes commodity department, sometimes foreign exchange department related. I think the answer to this with Bitcoin is very similar. With thousands of other coins, it can be a security, it can be a utility token, can be all sorts of things. Crypto does not equal crypto. It is really important What does it represent? Is there any asset attached to it or not?
Can you transact with it, which I think is what he's asking?
Absolutely, yes, in an easy way. So you can transfer from A to B in short time over thousands of kilometers with no borders in between. And this is revolutionary.
I think the Bitcoin is the new gold.
So do you think Bitcoin will pass the all-time high of 65,000 in 2021? That's from another viewer.
I have no idea, and that's why I would go into a crypto strategy that we are offering.
That was a good frame. I like that. That was a good lineup.
I pretty believe it will cross it. I don't know if it's crossing it in 2021, but it will cross it definitely anytime in the future. Maybe in 2022, January 1st.
And so we have an interesting one now from an institutional perspective. So from Caroline Vater. She's asking, it's said that a lot of the recent crypto volatility is caused by whales in the market. If you say that big institutions may be able to enter the market soon as well, what manipulation power might they hold over the market?
It's actually a very good question, Adrian.
I think David has a good answer to the first part.
Okay.
So
you guys can see the questions, right? Yeah.
Oh, yeah.
Question Q&A.
What caused the recent sell-off?
Very, very, very good question. So whales are holders who have a high amount of cryptocurrencies. Do big stock owners have manipulation power? Yes. Do institutions who have a higher amount of an asset manipulation power? Yes. Everything on a short-term basis. So, of course, if somebody owns 10% of a stock and he sells them all at market, the price will go down drastically. The same within the crypto world. But I think it is not about the short-term manipulation, because over a little bit longer time frame, the real movements will develop, and that is, in my opinion, if you invest like privately over a couple of years, this should be your time focus. On a shorter time focus, you have to be an algo and you have to be like super flexible. And that's what our strategy could apply.
Maybe we should put that into the live example right now. What happened? Why did Bitcoin drop 50%? This was caused mainly by the Chinese government banning Bitcoin mining. At that point in time, I think 60% of the Bitcoin mining happened in China. And if China bans it, and that's exactly what happened, they have to move out of China. And this is like this whale thing. Now it's going to be diversified. These people go to Paraguay, to Norway, to El Salvador, and wherever in the world. And there will be no another China can do the same thing to the Bitcoin, which it did in the last 8 weeks. So this is exactly the answer to the question. Over time, the more it's going to be institutionalized, the more stable it will be, and the volatility will be reduced. Like the stock market, when you see early stage ventures, very volatile with the listing, but over time the Nestle is much less volatile than smaller stocks. So the same thing with Bitcoin. Bitcoin is less volatile than the other ones. So this is exactly the answer to the question.
Less volatile, but what about the cost? So one of the attendees is asking, what about the cost when investing in crypto? And how important is the influence of popular people? I guess he's talking about Elon Musk. Mm-hmm. He or she, it's anonymous. So what about the costs, and how important is the influence of popular people like Elon Musk, for example, for the price?
Well, cost-wise, it really depends on the infrastructure that you're using. So in our case, for example, we're really going for the lowest or cheapest exchanges with the highest liquidity. It really depends how you transform fiat. It can be anything from 5 bips to 500 bips, depends through which channel you go into the crypto sector and trade. And then it depends how often and frequently you trade. Obviously, the more costs you have. If you buy and hold for 5 years, I would think the costs are more or less neglectable. Quite the opposite. You can stake coins and get interest-ish returns for staking it. So this is a positive.
That's a very interesting question, the costs, because this was my first question to Adrian when he said, let's do something. And compared to the costs we have in the old financial world, it's neglectable, not because of the volatility in the price movements, but because of the efficiency of the system of the blockchain. I think that's one of the biggest advantages in terms of costs. And on top of that, when you buy your coins and you store it, you can stake it and you get interest on it. Where do you get interest on your equities or on your bonds, which you're holding in your portfolio? I don't see that. Maybe you get some dividends, but that's very thing. And with the next question about the popular people, Elon Musk was influencing Bitcoin heavily this year. First, he was pulling it up and making money on it, and then he was bashing it. This will stay as long as it will stay that these whales are important to the price movements. But the longer we wait, the more people entering the space, the less influenced by popular people will be there, will be experienced. I think that's the best guess from my side.
I agree. And Stefan, may I add to this that the same person who took heavy influence on Bitcoin, Mr. Musk, actually took heavy influence on his own stock, Tesla, as well. Very, very short period before that happened, and the stock moved like hell, and the SEC came on the plan as well. So I'm not sure. I think the manipulation is probably slightly higher, maybe like stocks in the 80s or 70s. Mm-hmm. But this gap will close pretty soon, I think. And I think that's.
So I think if anybody has any more questions, please definitely leave them in the chat. We are at our time. We made very good time today, guys. If there are any kind of closing remarks or little things that you want the audience to remember about Belvoir, please share them now. And we hope to see you again at our next webinar. So please go back to school and learn about blockchain and crypto. Because if you don't do it, your kids are doing it. And, maybe come to Belvoir and learn about it too. Yeah, and we can help. We provide help. This is really something, and really follow on this. Very important from my side.
Thanks, everybody.
Thank you, Stefan.
Thank you, everybody.
And thank you, everybody, for joining us. We hope that you will continue to join our webinar series starting in September.
And as we taped it, please share it to your friends, your partners, to your family members. We'll put it on live on our homepage anyways. Thank you. Watch this space, guys. Thank you very much and have a great day. Bye.